Hello everyone, welcome to the market opening bell for Tuesday, January 20, your 10-minute guide to the stock market. Hong Kong stocks tracked overseas markets lower on Monday. The Hang Seng Index opened down 203 points, dropped as much as 311 points to an intraday low of 26,533, then traded choppily with a high of 26,715, down 129 points, and finally closed down 281 points or 1.05% at 26,563. The H-share index fell 86 points or 0.9% to 9,134, while the Hang Seng Tech Index declined 72 points or 1.2% to 5,749. Total market turnover contracted further to HK dollar 225.6 billion. Southbound Funds Net bought HK dollar 2.292 billion of Hong Kong stocks, with notable net purchases of SMIC HK dollar 461 million, Hua Hong Semiconductor HK dollar 393 million, Tencent Holdings HK dollar 273 million, Alibaba W HK dollar 265 million, and Xiaomi Group W HK dollar 166 million, while net sales included China Mobile HK dollar 599 million, Uptech Robotics HK dollar 517 million, and Meituan W HK dollar 286 million. According to statistics, Southbound funds have now net bought Tencent for 9 consecutive days, totaling HK dollar 9.957 billion. Alibaba for 6 consecutive days, totaling HK dollar 4.689 billion. SMIC for 3 consecutive days, totaling HK dollar 1.726 billion, and Hua Hong Semiconductor for 3 consecutive days, totaling HK dollar 1.093 billion. While they have net sold China Mobile for 11 straight days, totaling HK dollar 8.662 billion. Technically, the Hang Seng Index has filled the upward gap from last Tuesday between 26,608 and 26,729, and has fallen below the 10-day moving average at 26,633. Adjustment pressure is expected to remain in the near term, and a break below 26,500 will likely test the 20-day moving average at 26,236. Mainland Asia's opened lower and then diverged. Turnover in Shanghai and Shenzhen shrank to around RMB 2.7 trillion. The Shanghai Composite rose 12 points or 0.3% to close at 4,114. The Shenzhen component gained 12 points or 0.09% to 14,294, and the Chinex fell 23 points or 0.7% to 3,337. The RMB USD central parity rate was raised 27 pips to 7.0051, the strongest level in over 2.5 years. Effective January 19, the People's Bank of China officially cut re-lending and rediscount rates by 0.25 percentage points. The new rates are 0.95% for 3-month agriculture and small business relending, 1.15% for 6 months, 1.25% for 1 year, 1.5% for rediscounts, 1.75% for pledged supplementary lending, and 1.25% for special structural monetary policy tools. The first quarter is traditionally the peak season for bank lending, and introducing these structural reforms early in 2026 will help reduce banks' funding costs, enhance the appeal of structural tools, protect net interest margins, and encourage more proactive lending to priority sectors. The National Bureau of Statistics released GDP and inflation data that continue to show the familiar divergence of strong exports and weak domestic demand. Fourth quarter GDP growth slowed to 4.5% year-on-year from 4.8% in the third quarter, in line with expectations and largely due to a high base while quarter-on-quarter growth edged up to 1.2% from 1.1%. Full-year GDP growth was 5%, meeting forecasts. December, industrial value added for large-scale enterprises accelerated to 5.2% year-on-year from 4.8% in November, beating the consensus 5%. Strong exports lifted manufacturing momentum, though auto production growth slowed further and steel output remained sluggish. Full-year industrial value added rose 5.9%. December social retail sales reached RMB 4.51 trillion, up 0.9% year-on-year and slightly below the expected 1%. Both goods and catering revenue growth decelerated. Auto and home appliance sales stayed weak amid funding constraints and fading trade-in policy effects. Ex-auto retail sales were RMB 3.97 trillion, up 1.7%. Full-year social retail sales total RMB 50.12 trillion, up 3.7% from 2024, with ex-auto sales of RMB 45.14 trillion, rising 4.4%. The mildly disappointing December retail print sparked hopes for fresh policy stimulus, a classic bad news is good news trade. Full year 2025 fixed asset investment fell 3.8% year-on-year versus an expected 3.1% decline. Real estate development investment dropped 17.2% against a forecast 16.5%, with residential investment down 16.3%. New home sales area was 881 million square meters, down 8.7%, and residential sales area fell 9.2%. New home sales value was RMB 8.39 trillion, down 12.6%, with residential down 13%. Year-end unsold inventory stood at 766 million square meters, up 1.6% from end 2024, but down 1 percentage point from November, with residential unsold inventory rising 2.8%. To further clear commercial property stock and boost investment, the PBOC and the National Financial Regulatory Administration issued a notice, lowering the minimum down payment ratio for commercial property loans, including mixed use, to no less than 30% from the previous 50%, though some pilot cities had already reached as low as 20%. The December urban surveyed unemployment rate was 5.1%, slightly better than the expected 5.2%. The full-year average was 5.2%, indicating generally stable employment conditions. On the Hong Kong board, Baidu Group SW 9888 bucked the downtrend, climbing as much as 3.2% intraday to HK dollar 150.3, a new high since August 2023, and closing up 1.2% at HK dollar 147.4. Baidu's Radish Run robotaxi service and UAE autonomous driving firm AutoGo jointly announced the official launch of fully driverless commercial operations for the public in Abu Dhabi, marking Radish Run's first overseas fully driverless public service. Separately, Baidu's AI chip subsidiary Kunlunxin has formally begun the process for a Hong Kong listing. The spin-off should help re-rate and unlock Baidu's asset value, signaling its shift from traditional search advertiser to AI infrastructure provider. The listing is also prompting Baidu to consider upgrading its Hong Kong status from secondary to primary listing to qualify for Stock Connect inclusion and attract mainland southbound capital. Reports say Xiaomi, Oppo, Vivo, and Tecno have all cut full-year shipment guidance, confirming earlier forecasts from research houses such as IDC and Counterpoint. The global smartphone replacement cycle has reached nearly 50 months in 2026. After the 2024-2025 AI phone surge, appeal has waned, and the foldable segment has entered a steady phase without the anticipated explosive substitution. Xiaomi 1810 fell 1.7%, while handset component stocks Q Technology 1478, AAC Technologies 2018, and Sunny Optical 2,382 dropped between 2% and 2.6%. Canada announced it will import 49,000 mainland-made electric vehicles, with tariffs reduced to 6.1%. BYD 1,211 rose 1.5% to HK dollar 100.7, and Chery 9,973 gained 4.5%. The initial annual quota of 49,000 vehicles, expected to rise to 70,000 over 5 years, is in exchange for China lowering tariffs on Canadian agricultural products such as canola. Industry insiders expect early 2026 market entrants to be mostly China-produced vehicles from European, US, or Asian brands such as Tesla and Volvo, Polestar, while Chinese brands like BYD still need Transport Canada certification. The Canadian government is crafting a new strategy to encourage Chinese automakers such as BYD and Chery to invest in local production or joint ventures, aiming to transfer advanced EV technology and build a domestic supply chain. Semiconductor stocks SMIC 981 and Hua Hong Semiconductor 1347 rose early but closed lower. Reports indicate Nvidia's H200 chips recently received US approval for sale in China but have been blocked by Chinese customs. Sources told media a batch has arrived in Hong Kong but cannot clear customs for the mainland. Meanwhile, Europe's second-largest chip equipment maker, ASM International, reported preliminary fourth-quarter orders of €800 million and revenue of €698 million, both topping expectations. Driven by a rebound in Chinese orders and robust demand for advanced logic chip equipment, the company raised first-quarter guidance, expecting healthy sequential revenue growth at constant exchange rates. US markets were closed Monday for a holiday after President Trump threatened additional tariffs on European countries over Greenland control. Investors piled into safe havens. The resulting geopolitical tension gave gold bulls another catalyst to drive prices higher. COMEX gold futures rose 1.8% to $4,676.70 per ounce, with sharp gains in early Asia trading today, climbing further to $4,698 and hitting a fresh all-time high. COMEX silver futures surged 6.5% to $94.28 per ounce, climbing further to $94.705 in early Asia and hitting a fresh all-time high. Silver continues to enjoy support from persistent physical supply shortages, resilient industrial demand, and safe haven buying. The gold-silver ratio has plunged from near 105 at the end of 2025 to just above 50, underscoring silver's stronger relative performance. Our stock pick today is Hutchmed, stock code 0013. Hutchmed, following renewal negotiations with China's National Healthcare Security Administration, will continue to have its drugs Ilinate, Opathies, and Sulanda included in the new edition of the National Reimbursement Drug List, effective from January 1st, 2026. In addition, Tasferic has been included in the inaugural Commercial Health Insurance Innovative Drug List. On the new drug application in China, the NDA for Ferenglatinib, HMPL 453, for adult patients with advanced metastatic or surgically unresectable ICC who have received prior systemic therapy and harbor FGFR2 fusions or rearrangements, has been accepted by the National Medical Products Administration (NMPA) and granted priority review. ICC is a highly aggressive malignancy originating from the intrahepatic bile duct epithelium. It accounts for approximately 8.2% to 15% of primary liver cancers and is the second most common type of liver cancer after hepatocellular carcinoma. Incidence has been rising steadily in recent years, with a 5-year overall survival rate of around 9%. Feregretinib is a novel, highly selective, and potent inhibitor of FGFR1, FGFR2, and FGFR3. Aberrant FGFR signaling has been identified as a driver of tumor growth, angiogenesis, and resistance to anti-tumor therapies. Hutchmed currently holds global rights to feregretinib. Separately, the NDA for savolitinib for adult patients with locally advanced or metastatic gastric cancer or gastroesophageal junction adenocarcinoma with MET amplification, whose disease has progressed after at least 2 prior lines of therapy, has also been accepted by the NMPA and granted priority review. Gastric cancer is one of the most common malignancies in China and a leading cause of cancer-related death. Savolitinib received breakthrough therapy designation from the NMPA in 2023 for this potential indication, recognizing its clinical evidence of substantial improvement over existing treatments for a serious disease. Recommendation buy at $24.2, initial target $25.5, further target $27, stop loss $23. I do not hold it for the above mentioned stock.